This video is the easiest and fastest Fibonacci extension video you will ever see on YouTube. So whether you are trading price action, you are trading SMC, you are trading ICT, or whatever strategy you are trading with, this tool is going to help you to start seeing the chart differently and also maximize profit. I know a lot of traders on how to actually use Fibonacci retracement but do not have idea on how the Fibonacci extension tool also works, or probably you know how to navigate your way through the TradingView platform but you don't know that this tool is a very powerful tool you can use in maximizing profit. Now, those of you who are new to this channel and do not know me, my name is Lamidi Sikira, CEO of Kiraforex Trading Academy. Now, without wasting much time, let's go straight to what we are about to discuss today. And also, if you are not part of my Telegram, I always say it in all my videos, be sure to link in the description below. Join our Telegram channel for free. And also, if you've not subscribed to this channel, you know, anytime I come up or I show up here, then I am about to blow your mind with something you will never see on YouTube. So without wasting much time, let's dive into what I want to teach you today. Guys, now let's look at the differences between Fibonacci retracement and Fibonacci extension. So I already have a video on Fibonacci retracement where I explained into details how to use this Fibonacci retracement tool. Today, our concentration is mainly on Fibonacci extension, okay? But I will still explain Fibonacci retracement at a point. Now, what is Fibonacci extension? Fibonacci extension, also known as Fibonacci expansion or Fibonacci extension, is a technical analysis tool used by traders to project potential price targets or areas of support and resistance beyond a previously established price swing. It's based on, let me put this here. It's based on a Fibonacci sequence and mathematical ratios derived from it, particularly the golden ratio 1.618. Then we also have the Fibonacci retracement, which is a technical analysis tool that uses horizontal lines to identify potential support and resistance level based on Fibonacci ratios derived from the Fibonacci sequence. Traders use the tool to find areas within a price movement. Within a price move from a high to a low or vice versa, where the price might pause or reverse before continuing its original trend. Key Fibonacci retracement levels such as 38.2, 50% and 61.8% are what we usually use. Now, how do you find the Fibonacci retracement and Fibonacci extension tool on your TradingView? So when you come to the left side, you just click here. You see the arrow after this. So first, second, third, you just click on the drop down menu or drop down bar here. You see the Fibonacci retracement and Fibonacci extension. You can see that I have starred mine, which means that I have added it to my tools here. So anytime I need it, I'll just come here to where my tools are and pick it. Now this is how the Fibonacci retracement looks, and this is how the Fibonacci extension also looks. Now you can also set it the way you want, but if you want it to be like mine, you can just take a screenshot of it and then set it this way. Okay, so if you want to set it, you can just click on it. You can just you can just click on the tool itself, and you see another bar will open. Then you set the figures. You untick the ones you want to untick and leave the ones you want. The same as on the Fibonacci extension also. Just take a screenshot of how mine looks, and you can also set yours like that. So this is how the Fibonacci retracement tool looks, and this is how the Fibonacci extension tool looks. We will have a feel of how to use this on the real chart for you to understand more and better on how these tools are being used. So let's move to the next one. On the next one, we are going to be talking about the differences in Fibonacci extension and Fibonacci retracement. Now let's look at the differences between Fibonacci extension and Fibonacci retracement. Okay, now with the features, we talk about the features, the levels, and the points used. So with the features, we have Fibonacci retracement is used to identify potential reversal point during a pullback correction within a trend, whilst Fibonacci extension is used to identify potential price targets for the trend's continuation after a pullback ends. Okay, then let's talk about the levels. Fibonacci retracement measure a percentage of the original move back towards the start. Example, 38.2%, 50%, 61.8% of the original move. The Fibonacci extension measures a percentage beyond the original move, which is 127.2%, 161.8%, and 261.8% of the original move. Then the points used, what are the points used when we are drawing Fibonacci retracement and extension? So Fibonacci retracement, we use 2 points. So we use this point and this point. Okay, so we use first, if we are in downtrend and we want to see where possibly price could reverse from, we start our Fibonacci from here, the start here, and then end it here at the swing low. So from the swing high to the swing low. Now in between, the numbers we are going to see here, which will be the 38.2%, 50% or 61%, will tell us where price is possibly going to reverse from with a candlestick confirmation or with whatever confluences or confirmations we would have during the pullback. Okay, I'll also teach you how to actually draw it very well. So a lot of people work with 38.2, some also work with 50, and some also work with 61.8, depending on what is actually happening after the pullback in any of the percentages. Then with them, in an uptrend, you start from the swing low, this is the swing low, to the swing high. So when price retraces to any of these numbers with confirmation, that is when you can now enter your trade. So that is for Fibonacci retracement. Okay, this is for Fibonacci retracement. Now let's look at Fibonacci extension. Fibonacci extension is quite different from Fibonacci retracement. Fibonacci extension is going to tell us the point where we can take profits in a trend. Okay, so if you see, so let's look at something here. So with Fibonacci extension, I wanted to give an example, but let's finish this way. Fibonacci extension, you start from point A. In an uptrend, you start from point A, which is the swing low, to point B, which is the swing high. Then you come back again to the point C. Other traders will only use the retracement level, but for me, I've tried the retracement level so many times and it's not working for me. So I pull it from the A swing low to the swing high, back to the swing low. Then the numbers, which is the 127.2, 161.8, 261.8, will now be my target where I'll be taking my profits. Now, in also a downtrend, you start from the swing high to the swing low, okay, then back to the swing high. Okay, so if price gets here and we see these numbers will now be our potential numbers that we are going to be taking our profits from, which means that when price get to any of these numbers, there could be a retracement. Okay, so let me teach you. Let's finish everything, then we look at the real chart. You will understand it more when we are on the real charts. Let's move to what we have to learn next, which is how to drop the Fibonacci retracement level. But first, let's talk about key levels and how they are used. Okay, then we come to the application in trading and how to draw it. So Fibonacci retracement levels are projected to indicate where the price is likely to pause or reverse after an initial move, which I already explained. And the common levels are the 38.2%, then the 50%. The 50% is usually the golden zone for most traders, and then the 61.8% is the deep retracement. I love using the deep retracement. When we do an example, you understand why I said I love using the deep retracement. The Fibonacci extension levels are projected to indicate where the price might encounter resistance in an uptrend or support in a downtrend and could be used for profit taking. Common levels include, I just talk about that. Okay, so these are the common levels. So the common levels are the 100%, projects the price target to be equal to the length of the initial move A to B to A, which I illustrated. Then we also have the 127.2%, the 161.8%, which is also the golden zone or the golden ratio for extension, which means most traders take profit usually on the 161.8% before any other move. Okay, so these figures are the potential places where price could reverse from when we are looking for a profit target. Then we also have the 261.8%. Now let's look at the application in trading. So traders use Fibonacci retracement levels to anticipate potential turning points and set their entry and exit points, but should always combine them with other technical indicators for a more reliable strategy. Okay, let me try and see if I can change this to an arrow. Very good. Then traders use Fibonacci extension primarily to set profit targets. If a trader enters a position on a pullback using a retracement level, they often use the extension levels to determine where to close the trade for a profit. So it is self-explanatory, and I've always also explained it over and over again. Now let's look at how to draw the Fibonacci extension and the Fibonacci retracement. First, you need to identify the trend. Determine if the market is in an uptrend, higher high and higher lows, or in a downtrend, lower highs and lower lows. Find the swing high and swing low. Select the most recent and significant peak, swing high, and throw, swing low in the identified trend. Using your charting platform's Fibonacci retracement tool, draw a line from the swing low to the swing high for an uptrend, or from the swing high to a swing low for a downtrend, which we did the illustration. The tool will automatically plot horizontal lines at key Fibonacci ratios, which is a 0%, 23.6, 38.2, 50%, 61.8%, 78.6%, and 100%. I've explained it here already. Then in an uptrend, these levels act as potential areas for support where the price might stop falling and resume its uptrend movement. In a downtrend, these levels act as potential areas of resistance where the price might stop rising and resume its downtrend movement. So that is that for Fibonacci retracement. Now let's look at Fibonacci extension. To apply a Fibonacci extension tool on a chart, often called a trend-based Fibonacci extension tool, you need to select 3 consecutive price points, A, B, and C. Point A, start of a move. Select the swing low in an uptrend or the swing high in a downtrend. Point B, end of the move. Select the swing high in an uptrend or the swing low in a downtrend. Point C, back to the move. So the point C will be you bringing the extension back to point A. Okay, the tool then project the extension levels based on the distance of the A-B move starting from the C. We will do all that on the real chart and you will understand better. So without wasting my time, let's move to the real chart. This is where we are going to feel how this is done. Okay, pay attention. So this is also on Euro AUD. Let's look at our FX example for both Fibonacci retracement and Fibonacci extension. So in the explanation, I said if you want to draw a Fibonacci retracement, first come and pick your Fibonacci retracement tool. In an uptrend, you start from a swing high. So from here, what price is doing is that we've seen that price has blocking structure and we had a retracement and price is moving upwards. Now that price I've gotten here, we want to continue buying this trade. Okay, so what are we going to do? How do we now enter? This is where we have to use the Fibonacci retracement tool. Okay, so now if we want to enter this trade, we first start from the swing low. From the swing low, which is here, we start from the swing low here. Okay, then we bring it to the swing high. This is our swing high here. So the retracement now is what is going to tell us where to enter this trade, okay, upon confirmation. So first, let's go for our Fibonacci retracement tool. We start from the swing low. This is in an uptrend. Kiraforex is a piece of higher highs and higher lows. So let's start from the swing low to the swing high here, okay? And when we're talking about the ratios to the numbers, we mentioned 38.2. We also mentioned 50%, which is the golden zone, and the 61.8%, which is the deep retracement. Now you can see that price is in the 38.2. Most people don't really use this. They wait for the 50% or the 61.8%, but sometimes it also works, because when you look here, realize that price has entered into the 38.2 Fibonacci retracement level and has given us this pin bar, which is already giving us a confirmation. Okay, it's giving us a confirmation, and also we have a confirmation on this key zone over here. Okay, you can see the key zone over here. So I've already combined two things already. All right, then we also have this zone that price has retraced to, which is our resistance zone here to our resistance, and now a support here. So this is possibly where we want to see price reverse from to the upside. Okay, that is that for the Fibonacci retracement. Now let's talk about the Fibonacci extension. Pay attention. So the Fibonacci extension, we are going to start our measurement from the swing low to the swing high and back to the swing low. Like I said, most people draw theirs from the swing low to the swing high and back to the retracement here. Okay, but the reason why I don't use this retracement is because you might not know if price has ended there or will continue moving to the downside. All right, so now we will use this point A, which is the swing low, to the swing high, which is the point B, then back to the point A, which is the swing low again for our profit target. So look at how I'm drawing it. You just pick your tool, place it here, extend it to point B, which is the swing high, then you bring it back to this zone, which is the what? Which is the swing low. Now, our profit target, what they are trying to tell us is that for us to take our first take profit, we start from here. Our first take profit will be here because this is a trending market. So this will be our first take profit. This will be our first take profit, 1.618, which we talk about, that is the golden zone. And obviously, this is where we always have to be taking our profit to be at the safer side. Then the second take profit will be here in case price continues moving up. We still have another number. You can see we still have another number here. Then the third take profit will be here. But we are going to mostly be concentrating on here and then here. So let's see the behavior of price after the Fibonacci retracement and the Fibonacci extension. Okay, let's see if price will get us to where we want. You can see what happened. You see that price started moving from here right after this pin bar to the upside. Now we want to take our first take profit. Let's wait patiently and see what the reaction of price. Okay, you can see nicely. You just have to be at the safer side, so just take your profits here first, okay, or take partial or break even. Okay, be sure, or take full profit. You don't owe anybody anything. Just take your full profit anytime price get to the golden zone. All right, let's see if we can get price moving to the upside. If it doesn't move to the upside, fine, we've already taken our profit here, or we've already taken partial here. We don't have anything to lose. Okay, that is why this place is usually called the golden zone. All right, let's see if we will get price moving up a bit. Let's see what's going to happen here. Let's move a bit faster. Okay, very good. Let's move a bit faster and see if price will get it. Now look at what is happening here. The market has ended here. Oh, okay, the market has closed here. Oh, let's see. Oh, okay, it's still moving, but you can see that after we took our first profit, price came back to the retracement level. Who knows, our XL might be a little below and get hit. Okay, so the first thing you have to always do is make sure you take your profit at the 1.618 in any trending market, whether an uptrend or a downtrend, to always be at a safer side. All right, let's look at another example. Now, one of the reasons why I'm trying to teach you this is because of what I saw on gold, because I was looking at points where I can take profit. You know, gold now is at its high. and there is no resistance, or sorry, there's no resistance in previous data for me to take profit. So I was actually looking for points where I can take profit. And most of us are day traders, we always want to jump in and jump out. So I was looking for potential zones where I can equally take profit. That was when the Fibonacci extension tool came in, and I decided to also teach you guys. Okay, so for the Fibonacci retracement, first let's start from the swing low. This will be our swing low to our swing high. We are still in an uptrend, then back to this zone, and see if price is in line with what we learned. So this is it. You can see swing low, from the swing low to the swing high, point A, point B. Price is in the 50%. So the first one was 38.2. This one is 50. We also look for an example of the 61.8. So you can see price entered, and we had a double rejection over here. So we all know price is in an uptrend on gold. So what do? We can now enter safely from the 61 point. We can now enter safely from here. Let's bring out our long position too. We can now enter safely from this zone. Okay, but now we want to know where we can equally take profit. So what do we go for? We go for our Fibonacci extension. From here we draw from the swing low, point A, to the swing high, point B, then bring it back again to point A, which is the swing low. Now let's look at the potential place where we can take our profit. Okay, now this is it. Look at it. So our first take profit, when we enter from here, sorry, I want you to see everything on the chart. When we enter from this zone, our XL a little below, our take profit to be here. Okay, before we think of any other number. Okay, like I said, most of us are day traders, so our first take profit to be here before we think of any other number. All right, so let's look at the behavior of price after that. You can see what is happening. This is just nice and very smooth. Okay, boom, our take profit has been triggered. Look at this. So this is how sweet it is to use Fibonacci retracement and Fibonacci extension. The extension gives you where to take your profit. The retracement give you possible support or resistance zones where you can enter trade. So now let's look for another example in a downtrend. All right, so here on gold, let's see if we can get price. We've already targeted our golden zone and our profit has been hit. Okay, but we still want more money. So let's see if, because gold has been moving higher and higher and higher, so let's see if we will get price to this zone. All right, let's look at something here. Let's see if we will get price hitting our second take profit. Okay, so let's look at something here quickly. Let's see if price will hit our second take profit. Okay, let's see if price will hit our second take profit, which is our next level. Okay, very good. Now look at what happened here. Let me show you what happened here. Look at it. You see price has triggered the next level, which is the 2.618, and boom, we had price dropping. This is how powerful the extension tool is. Let's move to go and see another example in a downtrend. Now let's look at how to take trades using Fibonacci extension and Fibonacci retracement in a downtrend. Okay, so you can see that here we had price push up, went for correction, push down, went for correction, down, correction, down, correction, down, and a correction. Now we want to enter our trade from here because price has been moving towards the downside. All right, but here, are we just going to enter trades from here? No, because we don't know if price will continue from here directly to the upside by changing the trend, or whether price will push further up again. We cannot tell. So now we need to use our Fibonacci retracement tool. So this is the Fibonacci retracement tool. We draw from the high here, which is the A, to the low, which is the B. Okay, now we can enter our trades from here because you can see that price has entered into the 50% Fibonacci retracement level, which is our golden zone, and the 61.8 is the deep retracement. Okay, so now we've seen that we can now enter our trade from here based on confirmation. Okay, now let's look for where we can take our profit after entering. So we can now go for our Fibonacci extension here, draw from the high again to the low, then back to the high. I said earlier that most traders draw from the high to the low, then to where the retracement is happening. But the reason why I don't put the retracement into consideration is because I don't know if this is where the retracement is going to end or price will still go further. Okay, so I am going to be taking my retracement. I'm going to be drawing the last end at the last low. Okay, then my first take profit will be here. My first take profit will be on this 1.68, which is the golden zone. Then my second take profit will be on the 2.61, which is the extended 2.61 here. But I will always take my first profit. I will always take my first profit here to be at a safer side. Okay, so let's see what price gotta do. Okay, so let me put my where is my short position to? Just drop it here. Okay, my Excel a little above here, then my take profit to this point. So here we have 1:4 risk to reward, which is a very good risk to reward. Okay, let's see the reaction of price. Boom, let's see. Yeah. You can see it. Boom, our take profit has been hit. We've made money from the first or the golden extension level, which is here. Okay, now let's see if price will still go down again. But remember, we've already taken our first profit here, so we are already at a safer side. Always try to be at a safer side. You cannot predict. Okay, we just have to react to what the market is telling us. You cannot predict whatever is happening. You just have to react to what the market is telling you. All right, so this is an example of Fibonacci, how to use Fibonacci retracement and extension in a downtrend. So you can see that this tool is a very important tool.